Thanks, David. Firstly, I'd just say I'm not the MD or CEO just yet. That's jumping the gun a little bit. I'm coming on board 1st of July officially as part of this transformational acquisition of Rogozna. So Strickland announced this deal last Wednesday to the market, and it really is transformational for Strickland and its shareholders. So in this presentation today, I'm really going to delve into what is Rogozna. Well, why is Strickland pivoted and got this asset when they already have a very good asset in Western Australia? So hopefully I can help answer some of the questions about that. Next slide, please. So firstly, Rogozna is a really rare opportunity in the ASX junior space. This is a sort of project that traditionally only sits within a major. In fact, this specific project has been held by majors and more recently private equity for over 20 years. So it's never seen the light of day on the ASX. It's rare because it has significant scale. So already over 5 million ounce gold equivalent. Of that, about 60% is gold, 20% is copper. That's just in 2 deposits. So currently we've got 4 deposits defined by over 100,000 meters of drilling. So the other 2 deposits currently don't sit in resources, but they occupy a larger area than the existing resources. So the upside here is significant. In terms of location in Serbia, we'll touch on a bit more about Serbia shortly, but we are in an operating mining district in Serbia. So we're in the Trepča Mineral District, one of Europe's largest zinc, lead, silver mining districts historically. In terms of the team, myself and John Hronsky, partners of Iberia, we're stepping out of Iberia and joining the Strickland team as part of this transaction. But importantly, when you operate a project overseas, you need to have a really good team on the ground, and that's what we've got in Serbia. We inherited a really high quality team from Eldorado Gold, and we've put a couple of extra people in that to really complement that team. So we've got a really high class team on the ground day in, day out in Serbia driving this project. In terms of value, we also had over 60 million Australians spent to date on the project over the last 20 years, including about 25 million over the last 4 years. In terms of the acquisition, Strickland shareholders are getting a very good deal here, roughly 37 million deal value. The majority of that is in escrowed Strickland shares for 18 months. And just moving forward with our exploration plan, we're going to hit this project really hard from the beginning of June with about 60,000 meters of diamond drilling, and that'll substantially grow the existing resources and test a whole heap of targets as well. Next slide. So a bit of the history of Rogozna, and this is pretty important to give people an idea of the context of this project. So Iberia acquired this project from Eldorado Gold in late 2019. Iberia at the time were looking for assets in the region fundamentally because we were so impressed with what Adriatic Metals had done. And as the guy in charge of finding new projects at Iberia, I just thought there had to be other opportunities like Adriatic in this region. So we did 6 months of project generation in 2019. And during that time, we became aware that Eldorado Gold were looking to sell. Now, at the time, why were Eldorado looking to sell? Well, at the time, their mining operations were not performing. They'd had 6 months of negative cash flow, and this project only had 1 year left on its license. So basically, the exploration team at Eldorado were told, get out of all exploration projects. You have no budget for the foreseeable future. And this specific project only had 1 year left. So we were just in the right place at the right time and managed to acquire this off Eldorado by late 2019. Now, what happened in the first 6 to 12 months of our ownership at Iberia? So we got the main license renewed for a new 8 years. We acquired 2 additional licenses, which now gave us 185 square kilometres. And we made 2 new discoveries in our first drill program, one at Gradina North and one at Medenovac. So here we are today with over 5 million ounce resource gold equivalent, and Strickland will soon be the proud owners of this asset. And moving forward, we expect a lot of strong news flow. Next slide. So in terms of Serbia, a lot of people in Australia aren't that familiar with Serbia, and fair enough. But what I can tell you about Serbia, and I've worked in over 20 countries around the world, is Serbia is definitely up there with the best of them. So it's actually Europe's second largest copper producer behind Russia. And the reason for that is it's got a whole heap of giant deposits. So in the east of the country, in the Bor region, you've got a number of operating copper gold mines. Zijin Mining out of China have recently invested billions of dollars in that region, both acquiring Chakara Peki and stakes in Bor, but also developing Chakara Peki over the last 2 years. Where we're located is in the Trepča district. As I said, this is a historical zinc, lead, silver district with over 30 million tonnes of production historically. And the other thing that's really good about the country is not only do you have all the skill sets that you need with a mining jurisdiction, but you've got good quality infrastructure, and because the combination of geology, a pretty modern mining code, very favourable fiscal terms of 15% corporate tax. All the majors are in the country. So you've got Rio Tinto, BHP, Vale, Zijin, Dundee, Kinross, and also Newmont are on the other side of the border in Kosovo as well. Next slide. Okay, geologically speaking, what we've got here are porphyry-related deposits, but there's a key differentiator between these and porphyry. So our deposits are skarn-hosted gold and base metal deposits. The key difference between a skarn and a porphyry is within a skarn, you actually get a lot of high-grade zones. And over the next couple of slides, I'll show you what those look like. On this slide on the left here, this shows a plan view of our licenses. So we've got 4 licenses comprising roughly 185 square kilometres. In the southern part of the license, we have the 2 resources, Shinats and Copper Canyon. We've also got another drill-defined deposit called Gradina. And then in the north of the main license, we've got Medenovac. We've got an operating mine, a Srinats lead zinc mine, which is located 4 kilometres from our Shinats deposit. So these deposits form a cluster. So they're not far apart. In fact, from a mining perspective, they'll all feed a centralised plant. On the right-hand side here, we're looking at a long section from the south at Copper Canyon through Shinats and up to Medenovac. So Copper Canyon outcrops, we've got basically 800,000 ounce gold equivalent at surface there. At depth, we've got another deposit, Copper Canyon South, which is gold only. Shinats starts at about 80 metres depth and is open at depth and to the north. And then we've got Medenovac, which is our recent discovery, including in the guts of Medenovac, where we hit almost 100 metres at 5 grams gold equivalent within a broader sort of 350 metres at 2 grams. Next slide. So one of the key aspects of this project is really the optionality. So with each of these deposits, you generally, when you're drilling them, you get a very broad, lower grade intersection, generally anything from 100 to 400 metres thick, running 1 to 2 grams gold equivalent. And then within that zone, you'll normally get anywhere from 1 to 4 high grade intervals, generally 10 to 50 metres thick, up to 97 metres thick at Medenovac. And the grade within those zones generally runs between 3 and 6 grams gold equivalent. So you get a level of optionality on the grade tonnage curve from bulk scale, bulk tonnage, down to more moderate scale, higher grades. And then each of these deposits has a slightly different metals mix. So Copper Canyon is roughly 50-50 copper gold. Gradina is basically 90% gold. Shinats is 80% gold and copper. And Medenovac is 60% copper and zinc. So you also get a level of optionality around which of these deposits do you want to hit first and bring online first? Do you want the more copper-rich deposits because of obviously all that the copper demand moving forward? Obviously, gold price is really good at the moment. So do we hit Gradina harder because that's 90% gold and it's the highest grade gold? So as I said, this project has a lot of levels of optionality built into it. Next slide. Okay, Shinats. So Shinats is currently the most advanced deposit. This one's got 4.6 million ounce gold equivalent. But a really key aspect of Shinats is within this bulk tonnage ore body, you've got a very nice, relatively coherent high-grade zone. So on this long section here, the high-grade zone averages 25 meters thick at about 3.3 grams gold equivalent. So whilst the overall ore body is a big bulk tonnage, lower grade ore body, within that, you've actually got an ore body within it that's actually higher grade. And through the guts of that deposit, you've got up to 20,000 ounces per vertical meter, which is pretty much unheard of in Australian projects. The other key aspect of this deposit, the current bulk block model, there's no constraining or domaining of the high grade zones, and it's a diluted MIK model. So the actual grades within this deposit are actually higher than what's in the model. Next slide. Okay, Medenovats, so similar story to Shanats in terms of you've got a high-grade core within a big bulk tonnage deposit. In the case of Medenovats, the guts of that core is roughly 5 grams gold equivalent and almost 100 meters thick. It's been drilled along 600 meters of strike. But the other key thing for Medenovats is there's actually 2 parallel zones of mineralization. So one at Chesme, there's one old hole there, over 100 meters of mineralization, including roughly 36 meters at 3 grams gold equivalent. And at Kotlolvi, there's no drilling, but we've got the IP anomaly, which maps the alteration above these deposits. And we've got outcropping mineralization in the volcanics. The other key aspect from Medenovats is all of the geophysical data sets, all of the drilling, all of the alteration points to there being strong potential for a porphyry at depth here. So in that bottom right-hand image, what we're looking at there, you've got a large magnetic anomaly sitting underneath the skarn deposit. And this is the same spatial context that you'll get in all the giant porphyry deposits such as Erzberg and Grasberg. Next slide. Okay, Gradina. So this is back to the south. So this is about a kilometre away to the south of Shanats. So this is the highest grade gold deposit. It's got very simple metallurgy, over 86% met recovery. Key thing for Gradina is it actually hasn't been drilled near surface. So the reason for that being is the access tracks here through the valley to the west. And we've got some serious drill hits, 50 meters up to almost 5 grams gold. A lot, generally multiple loads, 10 to 30 meters thick. And it's all up dip towards surface where we've got soil samples running up to 1 gram gold. The density anomaly also projects towards surface as well. So one of the first things we'll be doing in June is putting a track in up the hill here and drilling it at its shallow levels. Next slide. Okay, just 500 meters to the east of Gradina, we've got Copper Canyon. This is essentially a 50-meter thick blanket of copper gold running 1 gram gold and 1% copper surrounded by a lower grade halo. It's got 800,000 ounce gold equivalent in a $2,000 pit, and about 200 meters underneath that, we've got a gold-only deposit called Copper Canyon South, which has got a few drill holes, including almost 40 meters at 3.7 grams, and that doesn't sit in any resource at this stage. Next slide. In terms of exploration, so one of the great things about this deal for both parties is, this is a serious project and we're going to be able to hit it really hard and do it justice. So 60,000 meters of diamond drilling planned over the next 18 months. A bit over half of that will be resource drilling focused on Medenovats, Gradina and Shanats. So we are aiming to double the resource within the next 12 months. But just as important, we're going to drill at least 25,000 meters of exploration holes. So we've got a target pipeline of over 20 targets. Several of those already have significant intercepts. So we're really only 1 or 2 deposits away from, showing that this project has the potential to get north of 20 million ounce gold equivalent. Next slide. So in summary, really what I'm hoping investors, including existing shareholders, walk away with today is really an understanding of what this project can deliver. And, and ask yourself the question, what do you think this project will be worth when we double the resources over the next 12 months? What do you think it will be worth if we find one or two more new deposits, and start providing that visibility towards 20 million ounce gold equivalent. Because once we have that visibility, this project is firmly within the top 50 projects globally. And then if we can emulate the success of Adriatic Metals and push this project through studies and towards development on that sort of scale of resource, what do you think this project and Strickland Metals will be worth at that point? And that's really it.
Thanks, Paul. Great presentation. Significant acquisition, as you mentioned, and clearly going all in on Strickland. So shareholders love to see that. A stack of questions, and I'm going to try and sort of group them together to make it easier to answer. Particularly, or focusing initially on Serbia, what is the operating environment like, and what is the permitting process like?
So from the operating environment, it's one of the easier places I've worked. I've worked a heap in Africa and Asia and Australia. So operating, I can call my guys today and say, can we start drilling in a week? And I'll have a rig there in a week, and we've got all the approvals in place already to drill. So drilling cost-wise, Serbia's relatively low cost. So diamond drilling all in costs about $110 a meter. So that's probably 30% cheaper than Australia. And there's plenty of rigs available because of the mining industry there. So certainly operationally and getting the job done, I find it really straightforward. Permitting from the exploration side of things, we found it to be quite straightforward. You get 8 years of exploration license before you need to convert to a mining license. So we've used the first 3 years already. So we've still got 5 years to go on the main license. To convert to a mining license, you only need to have inferred resources by JORC standards. So once we've drilled Medenovats and Gradina to resources, there's nothing stopping us from starting that permitting process for that main license.
And in terms of metallurgy, a couple of questions here. How much work's been done, and have you got any results to speak of?
Yep. So we've been doing metallurgy work since we first acquired the project. So we spent about $500,000 to date on met test work. It was certainly one of the question marks when we were doing DD on the project in 2019. There hadn't been much med test work. And as most people would understand, polymetallic deposits can be quite tricky. So we've done met test work on all 4 deposits. The results to date have been very positive. So for 3 of those deposits, we've pretty much identified the flow sheet with acceptable sort of roughly 80% recoveries. So Copper Canyon, you get over 90% copper recovery. Shanats, you get basically 80% copper gold recovery. Gradina, you get 86% gold recovery. The one deposit to date where it's been a bit trickier has been Medenovats because of the higher zinc content, and zinc being mainly sphalerite and chalcopyrite for the copper. They have similar float characteristics. So to date, for Medenovats, we've got very good zinc recoveries, over 80%, but the best copper recovery we've got for Medenovats so far is about 75%. So Medenovats needs a fair bit more work and a lot more drilling. It's obviously the least drilled of the deposits as well, but certainly, the early indications are very good.
And what evidence is there to support the porphyry, copper, gold, and other resource upside potential?
On the porphyry front, so generally, if you've got a scale of a skarn system of this scale, there's a general rule which is, firstly, you're 10 times more likely to have a mineralized porphyry nearby. But certainly specific evidence. So for Medenovats, for example, in the drilling at Medenovats, we've got high sulfidation epithermal veins in the base of the deeper parts of the holes. And these are sort of veins you typically get sitting above a porphyry. We've also got the geophysical anomalies. So we've got a very large remnant magnetism anomaly sitting beneath Medenovats. We've got a very large resistor as well in the EM data, which is what you'd also expect in a porphyry environment. And then you've got the alteration. So Medenovats has really strong hematite alteration. So it's indicative of an oxidized system. Oxidized systems are more likely to give you porphyry copper gold mineralization. In terms of the other upside, just in the skarn style deposits, as I said, we've got Copper Canyon South, which has got already drill holes into it. We've got Chesme, which has got drill holes into it. We've got Jezerska Reka, which we discovered last year, has 800 meters of alteration and mineralization from surface. So we've got 3 or 4 prospects already that we know are mineralized and just need more drilling. And that's not including the other 15 or 20 targets on top of that.
Now, I understand you do have drill results pending. What's your expected timeline on delivering those to market?
So now that we've announced this deal, we'll send those samples to the lab. We drilled 2 holes earlier this year in January, February at Medenovac. And so we'll send those samples to the lab now. We should get those results in the next 3 to 4 weeks.
A good question here. Clearly a shareholder who knows their business. Copper Canyon has some shallow near surface mineralization. Is open pit an option there and elsewhere?
So open pit, so it's obviously been optimized open pit, and it's technically doable. In terms of whether we want to down the track develop Copper Canyon as an open pit, I think time will tell on that. Certainly, all the other deposits are underground, and we're very comfortable with that. All the historical mines in the Trepča district are predominantly underground. There is small open pits around the place, including at that Srinats mine, but certainly for us, Copper Canyon as an open pit isn't forefront of our mind at the moment.
And a good question here, when people look at investing in resources companies, sometimes they're explorers, sometimes they're developers, sometimes they've got an eye on production. Where do you see you and the new management team coming in? Are you focused on getting these into production, or are you looking to just explore them to grow them as big as possible?
So at the moment, certainly our initial focus is to do the drilling and the exploration work to grow this as quickly as possible. But importantly, in the background to all of this, we will be doing all the study work as well. So I think you don't need to look much further, for example, than Adriatic Metals, and I have a lot of respect for Paul Cronin and those guys with what they've been able to achieve there in Bosnia. And that's certainly a pathway that we'll be following. But, I'll be also very surprised if a major doesn't, want to get involved with this project at some point in the near future.
Now, there is a question on the WA assets. So the Yandal project in WA is showing a lot of promise. Is there intention to produce that asset or to continue selling it to the likes of a neighbour? So you're going to continue with the asset, or
Yeah,
are
we're going to
open?
That's a really important part of the story as well. So certainly from an Iberia perspective, we really love that asset, and obviously Strickland and its shareholders love that asset too. So we think it's really complementary. It's of high strategic value. So the exploration plan for the Yandal actually doesn't change at all. We've got 2 rigs there now. We're going to continue hitting that project really hard as well, because obviously the value of any ounces we find there are huge given the proximity to Jundee. And certainly, we're not shying away from the fact that, we can grow that resource pretty quickly as well to sort of north of 500,000 ounces. That there's, high potential to do another Northern Star deal there as well.
Paul, a great presentation, clearly a transformative acquisition that's excited not only your shareholders, but the market generally. Incoming CEO, but clearly all in on Strickland Metals and its assets. So we look forward to watching with interest. Thanks for your time.
Thanks, Dave.